Hey, hello and good morning, everybody. Hi, my name is Darius Anucauskas and I'm the global market analyst here at Markets.com. Look, what a week we are having, honestly. We had the US CPIs on Wednesday, and that was probably the top economic event on the economic calendar. And honestly, we had some good volatility. Look, if you're a DAX and gold, bull, congratulations to you. You're having a blast this week. So I'll wrap up the week about all that and a little bit more in the upcoming webinar right now in a few seconds. So stay tuned. Hopefully you'll enjoy the session, and I'll see you in a bit. All right, okay, hello, and good morning, everybody. Hi, my name is Darius Anucauskas, and I'm the global market analyst here at Markets.com. Look, I hope everything is running smoothly. I hope you can hear me and see me well. So whoever is tuning in right now live, please could you do me a favor and could you just let me know in the comments, in the chat box there, if you can hear me and see me well. So, ladies and gentlemen, let me just double check if everything is running smoothly here. Yep, it seems like that. But hey, first of all, of course, as always, good morning in the chat room. Good morning, everyone. There we go. So yes. Look, we are having a very interesting week this week, I think, in my opinion, especially for those DAX and the German index DAX and the gold bulls. But I'll talk about all that a little bit more. Before we jump into the charts, let's quickly have a read through our risk disclaimer. So yes, the content we produce does not constitute investment advice or investment recommendation and should not be considered as such. This material should not be taken as an invitation to acquire any financial instrument or product. I'm going to let you read the rest. I'm not going to disappear anywhere. But yes, I mean, in general, I think we need to go through this very quickly. And yeah, I mean, look, I mean, yesterday we had quite a spectacular day, in my opinion. And yeah, I think that there are a lot of things to discuss. Anyway, also before let me just double check everything is running here. Okay, before we also jump into the charts, just a very quick mentioning of our Markets.com website, which you can always check out for more information about us. If you always have any questions, honestly, reach out to us. We'll be more than happy to assist. You can reach out to me on LinkedIn if you wish. I mean, we can have a chat if you want to have a chat. But yeah, look, let's without further ado, actually, let's jump into the chart. And I have DAX here already ready, but let me just pick up on Nikkei very quickly. So look, Nikkei managed to rebound nicely this week from this 200-day EMA and this upside line. So everything kind of worked out nicely here. But as I said to you in the beginning of this week, and I'll stick to my words, that basically I am not doing anything with this one. Why? Because from the technical perspective, we are still stuck in this little ascending triangle pattern. Well, ish kind of ascending triangle. But we're basically stuck. We're stuck below this 40,000 kind of 300 zone and this upside line together with that 200-day EMA, which is, yeah, doing a fantastic job in my opinion. So I will say that like I said, yeah, I'm waiting for that clear breakout. And once I get that clear breakout, amazing. That's when I'm going to consider the next short-term directional move. So at this point, if we do get that pop above that 40,300 zone and we see the body of the daily candle staying above that, then yes, I'll consider a bit of a move higher here for the downside. I need to see a break of this upside line and that 200-day EMA, and then we'll go from there. ASX 200, look at this. Ooh, now this one I like. Look, we opened with a gap a little bit here, and we kind of then filled in the gap. Okay, so but the most important is that I talked about this in the beginning of this week, and I said to keep your eyes on that 8,575 zone, something around here. If we can get that nice clearance, wonderful. More more buyers here could join in. So we did get that clearance, but we kind of opened above it. So now we're going to filling in back. So I will say it this way: as long as we stay above this, then yes, I will consider the next kind of upside move again if we do stay above that hurdle. But if we don't, if we start drifting a little bit lower here, then we start moving maybe back below the 8,540 territory, somewhere around here, then yes, great. I will consider maybe a bit of a move back down. However, my preference for the downside is still from around here, from around this 8,373. So if we can get that nice clearance, if we can get that nice drop below the 50-day EMA, then great, wonderful. I will go lower. Now, just a quick glance in terms of what has been happening. By the way, I forgot to do that for Japan. Let me just jump into Japan. Let's see what we had this week. What any exciting news? Well, the PPIs came out on Thursday, so those came out on the higher side. So this is kind of supporting the so for Japan, I mean, it's kind of supporting the idea maybe for the Bank of Japan, supporting the idea of maybe going for those higher rates eventually that they keep on talking about and they keep on advocating for. Yeah, okay, look, I mean, that's absolutely fine from my side. I mean, to support the Japanese yen, of course, you need to do these measures. However, can the Japanese economy maintain that? Okay, if the spending is if they can somehow maintain high spending, then okay, of course, yes, great, we can go for those higher interest rates. But if they're struggling with the spending, then the higher interest rates, maybe they're gambling on the fact that if they're gonna reduce devaluation or slow down the devaluation of the Japanese yen, then this way they can improve this sentiment, consumer sentiment, and just increase the spending. It's of course it's always a gamble. What can I say? Well, that's economy for you, right? But anyway, apart from other data, nothing else, nothing major. But that's fine. So Australia, very quickly on Australia. Let me just pick up on that one. Australia, did we have something interesting? Consumer inflation expectation is 4.6. Wow, okay, so it came out on Thursday. Right. Now business confidence 4. Okay, improvement as well. So in general, we have a good situation, it seems like we have a good situation in the economy in Australia. So, but those guys are not really in not in the mood of either cutting or lowering. I mean, not hiking or cutting rates. They have remained with their, where's that, 4.35, if I'm not mistaken, interest rate. Yeah, 4.35 rate. They have remained with that one for quite a while now. So I think that they're taking a very good approach, and I think that, in my opinion, that those guys in there are doing quite well. So, hey, keep up the good work. And it seems that the economy is still running and working. Yeah, as always, it has its ups and downs, but for now, it seems to be okay, So yeah, that's regarding Australia, and that's what we can see here as well in the ASX 200. So that's kind of reflected in there. Now, another index I really want to pick up here is China 50, and this one is amazing. I'm very happy about this one. Why? Because I was talking about this little range from last week, and I said to you, look, I like this one, and of course, although I'm a little bit biased towards the upside here, however, a confirmation break is required. And did we get that break? We got that break. However, this was a little bit of a annoying moment. We got the breakout, but then we kind of drifted back down, and the most important, we stayed above all the EMAs. We stayed above all the EMAs, and this kind of confirms the idea that I keep on talking about the Whenever we have a breakout and we see the body of the daily candle staying above a certain area, then that kind of increases the chances for that further direction. So that's what we got here. We got that pop up of the 13,000. What was the barrier here? 13,150 zone, yes, ish again. And now, yes, we're seeing a further move higher. In general, although we have these wars. In terms of tariff wars happening, I mean, there's a tariff here, tariff there, and but still everything is working, everything is going smoothly, in my opinion, and China is not really giving up that easily, and that's a good thing, and it's very nice to see that. So and actually some even big U.S. investors are actually looking towards China and Chinese economy and Chinese companies. So we'll see, of course, how that plays out. And of course, time will tell. But for now, I am supporting the upside here for now, as long as we stay above all my EMAs here on the daily chart. So the only thing is, how far do I think this could go? Well, I mean, I'm not gonna say that this is where I'm gonna go to the moon and and not back. But 13,716 zone, that's my first target on here on the futures, on the China futures. Then looking at this 14,119 and so on. So basically I'm going for these peaks for now, especially for this area. I do like this one a lot, and I think that's quite doable. So this area is slightly above that psychological 14,000 zone, so I think that could be a good game plan. Let's see, of course. Let's see if that's going to be the case. Now, what can I say? For now, that's I'm gonna stick to this idea as long as we stay above all my EMAs. In terms of Chinese news, let me just double check what's happening there. Let's have a look. Let's get rid of this. There we go. So not much, to be honest. Not much. Apart from today, we had some numbers here. Oh, actually, we don't even have those numbers yet. Look, I think next week could be a little bit more interesting. Loan prime rates coming out. So, by the way, next week we have a bit of a central bank rate decision week. So from Australia, New Zealand, and China. Now, we'll see how China comes out, because I think Australia is coming out on Tuesday. Then RBNZ is on Wednesday, and actually, you know what? Why am I guessing? Let me just double check that very quickly here, because I think that's the case here. So Tuesday, RBA interest rate decision. Wednesday, it's New Zealand interest rate decision. Yep, there we go. And then Thursday is China. So next week we'll have a much more exciting probably week in terms of central banks. But are we not having a very exciting week this week? I would not say that. So now then, so yes, that's the situation with China. Let's jump into before I jump into the German index DAX. Let's jump into the US. So US so far seems to be resilient, and they seem to be fighting. The bears. The bulls are keep on beating the bears for now, at least. Yeah, I mean, look, we got the CPIs this week. I mean, those came out. Where's that? Wednesday. Those came out on the higher side, so I already talked a lot about the CPI, so you can check out my videos on US inflation, which I did on YouTube. So yeah, you can, like I said, they're in the history, in the list, yeah, we already picked up a lot. But basically what I can say here is that inflation came out on the higher side. We're still seeing some positivity, and some people are saying, but hey, what about, let's say, why are we seeing that indices going to the upside? I think because that level of inflation did not really spook the Fed from cutting, from abandoning the cuts, basically. So that's the thing. Where's that Fed watch tool? It did not spook. So as I mentioned in my, like I said, my previous videos, that a little bit of inflation, let's say, if I said to you that on Wednesday as well, on Tuesday, sorry, I said that if even if we do see a little bit of inflation, let's say picking up, let's say we're going from 2.9 to 3, that could still show a little bit of growth. And so a little bit of inflation is good for the economy, because again, that shows some sort of growth. That means you're moving. You know, if it would have jumped, I don't know, to 3.3, 3.4 in one go, now that would be a little bit of a problem. But anyway, everybody was still kind of expecting, you know, the one cut. I mean, even before inflation came out, this number already dropped. This number already was, or should I say, this number had already dropped, and we were only expecting one cut by the end of this year. And that's what the market is currently kind of anticipating. But I think that although everybody was thinking maybe we'll get 2 cuts, look, 1 cut is still good. So I think that, you know, you find some sort of positivity in something that maybe you don't really like much, but you know, you're still finding positivity, and that's what we're seeing here right now. So we're seeing a bit of positivity, I would say. This week is still, yes, in the green, or in this case in my chart in the purple. Look, looking at Dow Jones Industrial Average, I talked about this one in one of my previous sessions here on you know, a while ago, on the February 3rd, last week basically. I'm waiting for that clearance. I'm still waiting for that clearance in order to get, let's say, comfortable with higher levels. Yes, we got a somewhat of a rebound from this territory, from this 50-day EMA, but you know, to be a little bit more I wouldn't say protected, but let's say a little bit more cautious, I would need to see that push about that 45,075 territory, because that's the current all-time high. And if we can get a nice clearance of that, then I will start aiming for some further upside. At this point, I'm just looking at this one. What I'm seeing is a little bit of a range here, so that means that if we are in a range, for those range traders, congratulations, you probably love this to hell. But you know, but me, I wait for the breakout and then I can do something about it. At this point, I'm just observing the price action. The S&P 500. Now, this one is a little bit more interesting, because this one is now knocking on the door, and it seems like it wants to create a new all-time high. So, you know, if we're judging from the past and what we've seen in the past and how these top 3 indices behave, and because NASDAQ, looking at this one, look at this. I mean, I've talked about, in the beginning of this week, I said to keep your eyes on this little downside line. I mean, if that gets cleared, we could see a nice push higher towards the current all-time high. And this is the thing, because whenever we see, let's say, the 2 of the 3 in top US indices kind of hitting new all-time highs, the third one usually kind of is picking up. So NASDAQ was the laggard, and Dow and the S&P were the ones that were, you know, like seen hitting those new all-time highs. So what I said to you last week, this week, I said to you, it seems like, you know, we could see NASDAQ picking up as well. So at the moment, now the tides are shifting a little bit. So now the S&P is the one that, you know, it seems like it's going to go for a new all-time high. NASDAQ probably will do the catch-up and go for all-time high as well. But then the Dow will have to play the game of catching up, because it's currently stuck. It seems like it's struggling to, you know, to push higher. If in general, it should then potentially go for that all-time high, if we're, like I said, judging from that theory. But if by any chance we don't, and let's say the S&P and NASDAQ are going for those all-time highs, but the Dow is struggling to go for it, well, I would say maybe there could be a little bit of a chance of a retracement to the downside. So I'm not trying to be, you know, very pessimistic here, but it's just something like from the previous observation. And if let's say the top 30 companies, you know, cannot really go and do the all-time high, what can I say? What can I say? It's a bit. It might be a little bit of an issue. So let's not rush, of course, into conclusions yet. So for now, everything seems to be still working out nicely. In terms of the economic calendar, what do we have By the way, yesterday, let me just double check the natural gas stock change. Oh, okay, declined. Okay, PPIs came out yesterday. Look at this, PPI 3.5 as previous, 0.4, declined. The month-on-month figure declined a little bit. Okay, the core PPI came out on the slightly lower side, so that's fine. That's not like the consumer price index or the producer's price index. So okay, and today, what do we have today? Import, export. Okay, let's see, import prices. Right. Okay. Retail sales are coming out. It seems like that. So retail sales up year on year. So currently we don't have a forecast, but the previous was at 3.9. So far, I mean, retail sales have been on a rise since October of last year. Let's see if they can still remain on the rise. If suddenly they don't, maybe this could actually force some of the indices back down a little bit for a little bit of a correction. However, I don't know if this is going to be, let's say, that big of a market mover. Industrial production year on year, that's something as well to keep in mind. So far, the figure is in positive territory after being more like for about like 5 months in. Okay, this was zero flat, but okay, let's say struggling to be in positive territory. Now finally jumped. So the question here for me for industrial production, if we can actually remain in positive territory. The same story for manufacturing actually as well. So this is where it's going to be quite interesting. If manufacturing and industrial are struggling to remain in positive territory above zero basically, and the retail sales do not come out very sparkly, then this is where the bit of worry could come into the market. At the moment, everything is pushing higher. Let's see how that's going to play out. The US dollar index very quickly. There we go. Boom. Fantastic. Finally. So we're seeing this. So of course, initially on the reaction of the CPIs, we had a move to the upside, but then everything kind of played out to the downside on this one, probably because the market kind of understood that still there's not going to be a cut. There's not going to be a pause for a cut, and the Fed will continue with that. So yeah, I think that the dollar bulls did not really like that, and that's what we're seeing right now. Either way, from the technical perspective, I said to you that if we do drop below the 107.5 zone here, I'm going to lean towards the downside. My next target will be the 100-day EMA, and then we'll go from there. We're currently near a key area of support around the 106.75 area ish, a little bit above that. But if that gets cleared and we clear the 100-day EMA, the 200-day EMA is my next target. Looking at this animal, look at this. I mean, this DAX this week is on fire. Now, the headlines suggest that it's all because of the potential plan for the peace or to stop the war in Ukraine. Yes, I'm assuming that this is the case. It seems, like I said, like I threw out this piece on our TradingView channel here on DAX, and basically this is where I said that DAX traders are not bothered about steel and aluminum tariffs for now, at least, that I threw out on the 10th. On Monday, and basically, yes, I mean, we can see that we cleared that and we just pushed further north. So when I was talking about this one, we were still below that 21,950 zone, and we cleared it on Tuesday, and there we go. We continue to rally. So my question is, I mean, can this go further north? Well, I would say there is, of course, a chance, certainly, but a bit of retracement would be nice, and I think that we'll keep a close eye on everything, on the industrial and manufacturing production numbers from the US as well, because again, those could, and also we're waiting for, to see if there are going to be any tariffs, and because at the moment I think that the tariffs are postponed. We only see those kind of threats in a way, but they're postponed, and yeah, I mean, at the moment, this is what's kind of also helping to drive the German stock market, because again, yes, threats are there, but they're not in action yet. So that's why, you know, this move higher here is, I mean, it's insane, I would say. For DAX, I mean, if everybody's thinking, wow, I mean, the German economy is doing fantastic. Well, it seems like this is the illusion that, you know, that everything is quite good. But is it? Well, I mean, at the moment what we're seeing here is a push. I mean, we're already from the beginning of this year, we're gaining around 14%. I mean, wow, that's sometimes what you do in a year. Well, the harder, you know, the stronger you fly, the higher you fly, the harder you fall sometimes, right? I mean, but okay, I don't want to be the, you know, the pessimist here, but again, we need to be very careful and very cautious, because this is just, yeah, it's at some point this has to reverse. You cannot really go all the way like that, but when, maybe soon, I don't know. Today's Valentine's Day, maybe the market will not feel the love, or something will come out, I don't know, that doesn't, you know, provide a lot of love for the German index, and we could see, you know, a move lower. But what can I say? For now, from the technical perspective, it continues to go higher, it continues to push north, and to be honest, if you're, you know, if you're looking for some higher levels on this one, then I would say probably wait for at least, you know, a push above the current all-time high, which is around the 22,628 zone. That's on the cash index, yeah, if we can clear that one, great, wonderful. More, you know, more buyers here could join in. So long story short, keep your eyes on this one. It's like I said, in terms of economic data from Eurozone, let's have a look. Where is that? Eurozone and Germany. Let's pick up on Eurozone and Germany. There we go. So employment numbers. So GDP growth rate coming up soon. So yes, keep your eyes on that. From the Eurozone, yesterday what we got, inflation rate, the German one 2.3, lower than the previous number. Okay. Industrial production from the Eurozone, improvement slight, no, it's not an improvement from the previous number, but better than the forecast. So, you know, maybe somebody overestimated that, so in order to, you know, they knew that this is going to come out, so in order not to look, you know, that bad. Well, anyway, but yeah, nothing major coming out this week, but next week we have the ZEV economic sentiment coming out from both Germany and the Eurozone on Tuesday, and then we have the PPIs from Germany on Thursday, and then the HCOB services composite and manufacturing PMIs coming out from both Germany and Eurozone. So something for you to keep in mind. By the way, don't forget that we have the federal election in Germany coming up on Sunday, on February 23rd. Something to keep in mind as well. So maybe DAX could start moving sideways, let's say, until, you know, we get the election, or in the contrary, could still, you know, continue pushing all the way higher into next week as well, you know, until we get that election. And but like I'm kind of leaning a little bit more towards, let's say, sideways action right now on DAX, to be, let's say, you know, we had a good move already, so maybe it would start, you know, moving sideways up until the election, and kind of then we can, you know, see which way this one's going to explode, or, you know, collapse or whatever. So yeah, at this point, like I said, keep your eyes on this one. I mean, this is, like I said, this is an animal on its own, and I'm really loving the action here. Very quick glance on the FTSE 100. We are pushing back below this little hurdle, this 8,770, something like around here. Yes. So okay, that's quite interesting. So we're falling back below that area. If we can stay below that area, then okay, great. This is the high of last week, by the way. So we did create a new all-time high here. We did clear that, but we're struggling to remain even above the high of last week. Well, that's actually kind of a bit of a red kind of signal for me. In a way, a little bit of a worrying alert. because maybe this is not, you know, ready to go further north. But again, we still have a full session to go through today, so keep your eyes on that one, and let's see if we can stay above the high of last week. Let's jump into the Forex world very quickly, ladies and gentlemen. I just wanted to pick up on this. So AUDUSD, there we go. We are moving. Yes, we are clearing that 0.6330 zone. We are currently trading slightly above that. So if we can continue to trade above that area, wonderful. I will go, I said to you already, I'm going to go for that 100-day EMA and the 200-day EMA if we go, you know, if we clear the 100-day EMA. For the downside, I would love to see here a drop below, I would love to see a drop below this little territory right there, 0.6246, in order to maybe start considering slightly lower levels. But either way, I mean, I prefer to wait for a drop below somewhere here, below the 0.6130, and then kind of go from there. AUDJPY, one of my favorite ones here. So, okay, I talked about this one a while ago, really, in the beginning of January, to be honest. I mean, I said we're in this rising channel. We are, you know, still trading here. So I said to you that if we do start clearing one of the sides here of this rising channel, then hey, that's when I'm going to consider the next short-term directional move. And for now, what I'm seeing here is that yes, we did drift lower. We moved nicely to the downside. Unfortunately we found support here. I would say unfortunately, because I was kind of hoping to see a bit of a deeper decline here. But look, we're retracing back up here. But we're finding good resistance near the 50-day EMA shown as the green line. So as long as we stay below this lower side of the rising channel, which we broke to the downside, and we stay below the 50-day EMA, then yes, I will consider a move lower. NZD USD very quickly, also pushing nicely to the upside, and there is a very interesting good chance that this could actually pop higher. Let's see, of course. So what's going to happen here? This is a key area of resistance to keep in mind, the 0.57 territory. We're currently flirting with that, and we're also, you know, flirting with that 50-day EMA. So if all that gets cleared, amazing, I will go higher. US dollar against the Japanese yen. Very quickly, look at this roller coaster ride here, and boom, Wednesday we pop higher. Then we realize that, you know what, not everything is that good for the US dollar, and we drift back down. Even despite the fact that the market is performing quite well, the Japanese yen seems to be on the stronger side. So, okay, look, what can I say? For now, I'm going to take it as it is. We can see that we're currently stuck in between my EMAs, the 50 to 100 and the 200-day EMA. So if you're looking for some lower levels, a drop below this 200-day EMA is required. If we can get that move, amazing. More sellers here could join in. So let's keep that in mind, and let's see how all this is going to play out. For the upside, obviously, I need to see a break of this downside line. Otherwise, I'm not really getting too comfortable with the upside. US dollar against the Canadian dollar. There we go. Boom. Amazing. Fantastic movement. I warned you about this move, and hey, there we go. That's what we're getting here. We're getting that drop, the clearance below the 1.4260, and we're reaching one of my targets, which is the 100-day EMA. So look, for now, I would say this way, that yes, that one of the targets got reached, and if we can clear that one, my next target is the 200-day EMA, and then we'll go from there. US dollar against the Swiss franc. US dollar against the Swiss franc. This is where the action is coming in here, and we are breaking this this upside line. There we go. Yes, we're still slightly above the 50-day EMA, but okay, that's all good. That's all fine. We're not rushing into this one. So, hey, for now, I would say this way. If we do drop and stay below the 50-day EMA, my next target is the 100-day EMA and the 200-day EMA as well. This is my game plan. Yes, we're breaking this upside line, but I would also prefer to see a drop below that 50-day EMA. Very quickly on, by the way, we're seeing here a a big move in the US dollar against the Indian rupee. And look at this. I mean, I think, if I'm not mistaken, just a second. Yes, I mean, so we had a rate cut from the bank, the Central Bank of India, and that was done like for the first time in 5 years or something like that. So basically, there was this. Apparently they have a slowdown in growth, and that's what they're doing right now. So the inflation number has been, the rupee has been declining. The devaluation has been significant, and now they've cut the rate. So okay, in general, you should kind of see, the opposite reaction, where you should see a weakening of the rupee, because again the cut has occurred. But in this case, it seems like it could be seen as something as a positive, just because maybe the economy is that big, and this actually could be something of a positive. Maybe it shows that there are measures taken. So the government, the central bank are not asleep. And that's why maybe this could be seen as a positive. So, and also the weakening of the US dollar right now, this is playing out nicely for this for the bears of this pair. Okay, look, we'll see how this continues, but again, what I can say here is that this has been devaluating for quite a while now, and I mean, okay, let's see if it somehow drops below this little territory. I would say this is 86.33 zone. Yep, I will consider a move a little bit lower here. So for now, on this pair, if I want to go higher, I need to see a clearance of that 88 zone. But for the downside, from the very short-term perspective, of course, it's 86.68, but then I need to keep an eye on the 86.33, this 50-day EMA, and maybe then we can go for some lower levels. Let's jump very quickly into EURUSD. We're seeing a nice pop here. Of course, a weakening dollar is playing out nicely here, but as I said to you before, a push above the 1.0533 zone for me is required in order to get comfortable with the upside. EUROJPY, what we're seeing here, also a nice rebound, but I'm not getting, we're very positive about this yet, because again, I need to see, my positivity will probably be somewhere on a break of this downside line. GBPUSD, yes, there we go. We're getting that pop. The ascending triangle is working out nicely. I talked about it last week, and there we go. We're clearing this. We cleared the 50-day EMA. We're clearing the 1.2523 zone. My next target is the 100-day EMA. I would say almost mission accomplished on this one. But then the next mission is towards the 200-day EMA. I know, very small little areas, but I'm going very slowly on this one myself. Yeah, let's jump into the commodity world, ladies and gentlemen. Look at this, gold is on fire. I mean, this week gold is just wow. I mean, it's just pushing and pushing and pushing. On Tuesday, we created a new all-time high near the 2,940, kind of almost 43 zone. But then, of course, we declined. We corrected back down, and okay, look. What can I say? I mean, this, and then on look at this on Wednesday, after when the inflation number came out. So initially we saw a negative reaction because the US dollar was strengthening very rapidly, but then it kind of lost its power. And then there we go. We started rallying. We cleared this. We went higher. 2,942 is the next one that I'm watching. Let's see if we can clear that area. If we can, well, ladies and gentlemen, I think that we could see a further move north. So the only thing is that, let's not forget that everybody's talking about that, psychological 3,000 zone. And the question is, are we going there now, or actually are we going to get a little bit of a retracement first and then go, towards the 3,000 zone? But it seems that the market doesn't want to wait for anything. Exactly. Let's see what's going to happen today. If we're going to get that push, towards that 3,000 zone. But again, this is, like I said, this is spectacular. If you're holding gold, I mean, as a physical gold, and probably you're enjoying the moment here. Silver, let's have a look what's happening. Silver, there we go. We got the pop. There we go. I talked about this one in the beginning of this week. I said keep your eyes on it because this is, you know, this is something to watch. And there we go. We're getting that pop. And now the question is, can we go towards that 34.85 zone? Well, this is what I'm going to at least aim for, and then we'll go from there. Let's jump into oil. Let's see what's happening here. Oil is stuck. It's stuck near that opening price of the year, and yep, it's currently in the negative zone, but it continues to oscillate around the opening price of this year and last year. This line right here is kind of marking the open of last year and also of this year. So we are currently oscillating around that level. It's not clear. I need to see a drop below the psychological $70 mark in order to go lower. Natural gas, let's have a look at this one. There we go. Continues to push higher. Everything is working out like a charm here, and so far so good, because what I said to you, that if we do break this downside line and this 50-day EMA, then great, I will go for some more upside. My next target will be 3.71 zone. Tick. I'm very happy about this, and yeah, what can I say? For now, this is my game plan. So let's have a look. Let's have a look at what's happening with coffee very quickly. Okay, we're stuck. We created a new all-time high today. Yesterday, but we're currently stuck. We drifted back below this previous all-time high. Okay, that's quite interesting. Let's get rid of the Fibonacci. No longer needed. So now the question is, can we see a push above that 435 zone? If we do, then yes, further upside is possible. But if we don't, then I would say for now it is stuck here. And if we do wanna get a nice drop below this 400, and if we do want to consider a move lower, we need to see a drop below this 409 zone. If we can get that move, amazing, I'll go lower. And finally, sugar, one of my favorite ones. We're near key area of resistance, and let's see if we can break that. Not saying anything, but this looks a little bit more bullish than bearish. However, we need a clearance first, because otherwise, I mean, this could just, you know, find resistance here and then kind of drift back down. So if it does fall back below my all my EMAs on the daily chart, then yes, I will consider a move back down. So let's jump into the crypto world finally, ladies and gentlemen. So yes, let's have a look what's happening here. Bitcoin. Look, I did a piece on YouTube, so you can find that little video in the video section on our Markets.com. I talked about the crypto world and you know, its reaction after the CPIs. Look, what can I say? I mean, at the moment we're oscillating around the 50-day EMA, so nothing basically major. So we're waiting for the next catalyst in a way. So for the upside for me, I need to see a break of this downside line, little downside line taken from the high of the 20th of January, or in other words, from the current all-time high. And for the downside, I need to see a drop below the 90,000 zone, because at the same time we could fall below the 100-day EMA. So basically, we need to, for the downside, we need to see Bitcoin getting, you know, thinking outside of the box. Getting outside of this one. Ethereum, still stuck. We're, you know, watching this one, observing this one, oscillating around the upside line. So I cannot really say much to this about this one. Ripple is also somewhat moving sideways around the 50-day EMA. Yes, it's currently above it, but still not really helping neither the bulls or the bears. Litecoin, very interesting. I talked about this one. I love this one, and it seems like there is a good chance we could see a little breakout here. Let's see if that's going to happen, because again, until that breakout happens, I cannot really get way too comfortable with the upside. So if I can get that, like I said, if I can get that breakout, amazing, I will go to the upside. At this point, I'm just observing the price action. Am I bearish? No. From where do I want to start looking at some lower levels? Probably somewhere from here, from this low of yesterday. Wednesday low. Yeah, okay, why this is like shifting like this? Okay, this, I think it's not updated properly, but look, If I want to go lower, I want to see a drop below this 111 zone, because at the same time it could fall below my 50-day EMA, and this is where we could see a little bit of a move to the downside. Dogecoin, what's happening here very quickly? Okay, again, we're stuck here, nothing major, but we're still in the falling channel pattern, and we're also below the midpoint of that falling channel. So in a way, everything's kind of pointing a little bit more towards the downside. And finally, Polkadot. The Polkadot is at a very interesting spot here, and if we can get that clearance of this downside line, I think that this is opening the door nicely towards the EMAs here on the daily chart, because those are currently getting into a bit of a squeeze. I think that could be a good target to test, but again, as I said, a break of this downside line is required. So, ladies and gentlemen, that is it for the week. Then that's a wrap. Look, I really would like to ask you to follow and subscribe and to our YouTube channel, just as so that you wouldn't miss out on all our updates, economic updates, all the videos that I do, and also the Trading View. You can check out our ideas here in Trading View if you're using Trading View. I think that you can find those useful as well. So, ladies and gentlemen, thank you very much. I hope you have a fantastic remaining of this week. Have a beautiful weekend. Join me on Monday. As always, we're going to have a look at the week, at the beginning of the week. And hey, let me know in the comments if you would like me to look into a specific instrument, or which I didn't look at maybe, and we can go from there. So I'll see you on Monday. As always, 8 o'clock GMT time, or 10 o'clock GMT plus 2. So yes, thank you very much for tuning in. Bye-bye.